Hi everyone, welcome to another episode of Phillip Trading Podcast. My name is Liao and today I'm glad to have my colleague William with me this week. So he's a senior dealer with Phillip Futures and he had carried out many webinars to our clients. So how are you doing, William?
Very good, thank you. Yourself?
I'm good as well. Good to hear that. So now if we all remember in the previous FOMC meeting in September, the Federal Reserve set to begin a bond taper in November 2021 with the target to end quantitative easing by the middle of 2022, which is next year. And in fact, the US indices rose to another record highs following the Federal Reserve's announcement on last Wednesday. So without further ado, let's dive into our topics today. The topic is, should investors look into micro US Treasury bond yield futures now? Okay, so I have a questions for Williams. So the first question is, can you briefly guide us through the result from the Fed meeting last week?
Okay, so basically to summarize everything, there are three main points mentioned by the Fed in the FOMC meeting. So the first one is definitely that the bond tapering is going to start this month, which is November 2021. And this whole tapering is going to end is likely to end the quantitative easing by the mid of 2022. Okay, so second, bond tapering, it does not, according to Fed, it doesn't equal to interest rate hike. So the Fed Powell, he stressed that bond tapering is not an indication for them to decide when to increase the interest rate. The Fed will focus more on the employment market and also on the inflation to determine when to increase the interest rate. And the last main point from the FOMC is that the Fed actually, he mentioned it once again that inflation is transitory, okay, and expect the inflation to cool down probably at the second quarter or third quarter of 2022. However, they also said that there is nothing much they could do about the supply chain issue, okay, because I think the entire market right now is highly affected by the supply chain. And this whole supply chain issue is going to last until the second quarter or the second half of 2022. Yeah, basically that are the main points from the FOMC meeting.
Okay, all right. Thank you for the summary. So the second question is, what's your view on the bond yield market after the decision announcement made on last Wednesday?
Okay, so basically, if you were monitoring the bond yield market, right, during the FOMC meeting on last Wednesday, the bond yield actually went up when the Fed announced the timeline of the bond tapering, which is to start this month, November 2021. So this is because the market in general are expecting the demand of the Treasury bond to decrease due to the bond tapering. So when the Treasury bond prices drop, the yield is going to go up. So when we put into a layman term, right, the similar concept is like when we try to buy a stocks, the lower the prices we buy, okay, the lower the prices we buy into the stocks, the higher your dividend yield. Okay, so lower the price, the higher the yield. So this is exactly the same concept like in the Treasury bond market. So in short, I reckon that when the actual bond tapering is going to take place, the Treasury bond yield will further go up because bond tapering means lower demand on the bond because the US government is going to buy less. Hence, the yield, which is the interest, is going to go up. So to me, right now, I think is the best timing for the investors to really look into the Treasury bond yield space. Yeah.
Okay, yes, indeed. So indeed, yeah, this is a good opportunity to enter the bond yield market right now. So can you tell us anything to look out for when trading in the bond yield market? And also which type of bond yield should investor focus more on, like a 2-year bond yield or 5-year or 10-year?
Okay, so to understand the Treasury bond yield market, we need to understand the relationship. We first need to understand what is a Treasury bond market. Okay, so Treasury bond, in general, they are considered as a very low risk investment because they are guaranteed by the US government. So the demand on the Treasury bond is usually higher when there are uncertainties, and vice versa. Okay, so back in April 2020 last year, when the pandemic suddenly hits the global hits the entire world, okay, suddenly the demand on the Treasury bond actually increased tremendously because everyone is unsure what is going to happen next when the whole world shut down. The international border shut down, everything shut down, production shut down. So people don't know what is going on. So all the hot money or the smart money, they tend to lock into the bond. So the demand actually increased tremendously back then. So when the demand increased tremendously, basically the yield crash. Okay, so the yield drops really low due to the demand. So after we understand the relationship between the yield and the bond itself, okay, as long as we know that as long as there are uncertainties, the demand on the bond will increase, and vice versa. When there is no uncertainties, the demand on the bond will drop. Okay, so when the demand of the bond drop, the yield will go up. So what is going to happen right now? So right now, do you foresee uncertainties in the market for the next 6 months, for the next 12 months? I think everything right now is quite clear. Okay, everything is kind of like in the plan. So the employment market is back on track. The global international border is trying to open up. The production is going into back to normalize. The market is actually very, very vibrating right now. It's really vibrant right now. So I think in short, there are not much uncertainties that people cannot expect it. There are not much uncertainties anymore. So when there is not much uncertainties, the US Fed, they will try to reduce the bond tapering, which means they think that the market is ready to go back to normal because there is no uncertainties. Hence, a lower demand on the bond. Okay, so the demand on the bond reduced, the yield is going to go up. It's just a matter of time. When is it going to happen? Okay, so the bond tapering itself is not taking place yet, but I think when the whole thing happens, the yield will continue to go up. Okay, so that is my point of view. So for your second question, whether we should focus on the short term or the long term. So short term, we refer to the 2 years or the 5 years bond yield, and the long term will be the 10 years and the 30 years bond yield. So I think, in my own opinion, I think we should focus on the short term one, because when market there is no uncertainties, the market will definitely try to dispose the shorter term bond more aggressively than the longer one. So if the investors are disposing the shorter one more aggressively, definitely the short-term yield is going to go up more aggressively compared to the long-term one. Yeah. So I hope what I try to explain is kind of clear. Yeah. That's my opinion. Yeah.
Okay, yeah. So for our trader or investors out there, so if you'd like to have a view in the bond yield market, so you can take note on what William has mentioned just now. Okay, so last questions. Can you tell us any products that we can look at if we want to take opportunities in the US bond yield markets?
So at Phillip Futures, we offer the micro treasury bond yield futures at super attractive margin for our traders to trade. So we offer all the short term, the 2 years, the 5 years, and the longer term, the 10 years and the 30 years micro treasury bond yield futures. So investors, if you want to trade, you want to participate, no matter you want the long one, the short term, or the long term, based on your own opinion on what are the current macro environment, yeah, you can feel free to contact us for us to let you know more about these micro bond yield contracts. Yeah.
Okay. Yes. Thank you very much, William. Thank you for your fantastic sharing. So once again, for our audience, if you would like to take opportunities in the US bond yield market, please do not hesitate to be in touch with Phillip Futures and trade micro treasury bond yield at a very attractive margin. So we will be very happy to help you on enquiries on this matter. Okay. So now we have come to the end of our podcast. Once again, thank you, William, for being here today, and I will see you next round.
Okay, thank you. Bye bye.
Thank you. Bye bye.